SWB audio capture, not registered.
Hello, Warriors. How's everyone doing today? Everyone doing all right? Okay, so Richard, AJ, everyone doing all right? And Richard, if you're feeling discombobulated, just relax. It's okay.
Play some pickleball.
What's that?
Play some pickleball.
Something. Can you see my charts, Ryan?
Yes, mate. Yeah.
Okay.
Everyone's talking about pickleball in the room today because
I know
Blake killed himself playing it last night or something. I didn't know what it was.
Yeah, it's like a version of tennis for senior citizens.
Is that why he's playing it?
I know Blake has been playing tennis up till this year. That's all I'm saying. Okay. It's a great game though. You get a good workout. You're
only saying that because you know he's not on yet.
Oh, well, no, senior citizens need to stay in shape too. Anyway, euro, maybe the dollar, finally. Let's see, it didn't confirm up here. And I know I've said it a couple days, but, how do the people that feel that got stopped out under 108 feel right now? They still feel like they're not missing anything. They may. I'm just,
SWB audio capture, not registered.
Well, now what if it? I almost wish I wasn't stopped out at 108, but it could still go lower. But I still, you look at the DSI. What's Euro 9? So I still think there's. The pain trade would be, I think, squeezing shorts. And, they've had 3 days take out that 107.55 low. They were within striking distance for 2 days. It's almost starting to look like, one of those classic, the market bottomed on the most dovish on the ECB, on a dovish statement. So I still think there's a chance it's coming out of here. Gold puked yesterday. On the daily, it's looking like a descending triangle. It could, I could be wrong and it could hold here. This is going to be the big test. Blake said to be careful yesterday. If it got under 1960, that was going to be like a false breakdown. And silver got clocked pretty good too. This is going to make 24 very important. You could call this a descending triangle too. So I have 3 of them working. Have you ever noticed that, Ryan or KMan or Blake, that, during certain periods in the market, a certain formation seems to pop up everywhere? It could be there's a bunch of wedges or, we're range bound, but so. And
you tend to get those when the market isn't sure. Do you know what I mean? Look at silver there. It's had the bounce from 22, good solid bounce.
Yeah.
And it's dipped back and it's gone back up to, and that the market's just not sure. It doesn't know if it wants to go up.
SWB audio capture, not registered.
A lower high, with a good bit of time in between, and the same on the other side. You get some higher lows. We had that move back to 24, bounce back up to the 26, come back down a little bit. It's just not sure, and those are
it's coiling. That's what you want to say. It's coiling, right?
Yeah, sort of, yeah.
You don't want to think it's distributing, do you?
If you get a break either way, that's what you go with, because the levels are showing you that's where the real support is, and that's where the real resistance is. So if you're going to make a move, that's your own break. I mean, back to euro dollar. Today, it's at a push up through the sort of 20-30 area. Just on a short-term basis, you look at something like a 15-minute or a 30-minute chart. You know, the intraday resistance was around that 2030 zone, and we broke up. You know, why did we break up? Well, we saw yields coming off today. Don't ask me why. I didn't see any news around it. Then we had an ECB Kazakhs coming out and saying that a July hike was a possibility. So that added to the euro move. That was a change of tone from February when he said a July move was unlikely. But right now, where we're right back trading down in the middle of that 2030 zone again. You know, if this break is real, if it's got any legs, you know, this is a small break in the grand scheme of things, an intraday break, if you like. If it wants to go high, it's got to hold this 2030 level. If it goes back under, then we're all the way back down to 108 and maybe the lows again. And again, no conviction. There's no conviction to do anything.
It usually is after a long, you know, bear market stretched out in time and price. And, you know, you're always going to have doubters at the beginning of any move for either from the top or the bottom. To me, it looks like if Euro gets back over this 109.40,
SWB audio capture not registered.
Twice, three times, right? But here's another descending triangle. So I count 3. So here's crude, same thing.
Yep.
Descending triangle, you know, major support. And unless crude breaks out here, the momentum and speed and magnitude of the bounce for major support, this is what I was looking for, was going to be weaker. So under 93, I don't know, maybe by, you know, the summer or fall, if that happens, I think that would help give some credibility to the Fed, maybe even Biden, who's down in the toilet in polls if we had $60 crude. Anyway, just a theme I'm seeing played out. A lot of descending triangles here in the gold, in the silver, and in the oil. So we'll see which one of them works. The implication for descending is down. You know, you usually anticipate a downside breakout, but, you know, you could draw the bottom line differently and make it a symmetrical, I guess. So that's what I see from yesterday. Is KMan around?
Good early morning, Dale. Good morning. Good afternoon.
Good morning. So did the BOJ do anything?
No. More MOF talks. Possible. Yeah. Possible. It is possible. We get some comments out of the G7 meetings because Japan is probably going to talk to the US, as they were hinting earlier this week. So we saw a run up into the 129s. Good levels up there, highlighted by Paulie in the room yesterday. And we shied away. There will be like big barriers waiting around 130. Exporter offers lining up what the market says. So now we shied away. Seeing the volatility, we shied away from
SWB audio capture not registered.
But I don't know. A lot will depend what's going to happen in the next week or so, because we have Bank of Japan next week, who are still buying JGBs to cap the yields so far. So I'm not saying there's a fight between Kuroda and Suzuki, but it's going to be an interesting few sessions.
I thought the big fight's between Yamaha and Suzuki.
Yeah, but then Honda has a word to say in there as well. So
what about Kawasaki?
Kawasaki. Yeah. Oh, come on, you're a Harley guy, Ryan. Anyway, so
Ryan is a Norton guy, yeah?
Norton, okay. Yeah.
Norton, I like that.
I'm an Indian fan.
Yeah, Bobby Axelrod had it. India.
So for the time being, I'm not even involved in the end. It could we were talking about it in the room. If nothing comes out of it, and if nothing comes out of those G7, nothing comes out of the Bank of Japan, we might as well trade 135 at the end of the month. If they do intervene, which is, according to their own saying, more a case of when rather than if, looking at the volatility, we might be trading close to 120 again. But then I suspect we are going to see huge bids now. If it comes anywhere close to 120, 121, I think it's going to be monster bid down there.
Just to explain to people who may not know, today is the IMF start. I think it's a start or ongoing spring meetings, but also in the middle of it, there's a G7 and G20 finance ministers and central bank governors meeting as well, which they can issue a communique on certain things like FX. And so some people are looking at this to perhaps get some comments on the yen from the Japanese side. There's potential possibilities of bilateral meetings or sideline meetings, whatever you want to call them, between the US and Japan officials. So again, there's a bit of a risk there that we may get some comments. I don't think we're going to get any screaming loud comments if we do, but the fact that they're talking might mean the market moves if we find that out, or in reverse, if we find out that they're not talking. As KMan says, not getting anything might mean that we see another leg higher.
They have to talk to the US, because being one of the main, now even the biggest, I think, US debt buyers, and seeing the US Treasury every 6 months bringing out their intervention and manipulators list, they don't want to get on there. So they have to talk to the US, because they likely will be on their own for interventions. I don't see any other country wanting to strengthen its own currency right now. So they have to talk to the US before even doing the interventions, to at least explain them what they are going to do.
Okay. Yields could put in a reversal day. I saw Helene comment that she was going to call for an ambulance because TLT was green. Okay, so look at that move in TLT. So it's not, it must be in the aftermarket, but it's green. So a lot of these markets are also stretched. The rubber band, you never know how far they could stretch it, but this is pretty stretched. I remember I was starting to like TLT at 130. I didn't imagine this. So pretty extreme, huh?
I was going to say, one of our friends here wrote that Bank of America have issued a recommendation to go long
audio capture,
treasuries.
not registered.
And I was going to say, I think they listen to F.A.C.E, because remember we've been talking about 10-year yields, and I've been saying for a while that I think they're going higher and higher, but I had this conversation with a friend of mine the other day, and he said, "What do you think they top?" I said, "Well, for a shorter move, anywhere between 2.90 and 3%, it's probably a nice place to go counter trend." Now, I don't think they're going to get to 225 that the Bank of America are saying, but I think 260, 265 is very is quite possible. After which, I think we're going to see even higher yields. But Bank of America have brought out this recommendation. Yields are dropping a little bit today, and they could well continue. And they're
looking for it back to around the 50-day.
Yeah, exactly. Maybe even you have that retracement there. I was looking at the charts and I was thinking something like 260, 265 could be done. Oh, yeah. But
previous high up here.
Somewhere around there. Obviously it's not an exact science, but a pullback like that. Look at this 45-degree angle from 160, 170 up to 290. It was just a straight line, so it would make perfect sense for a correction, nice ABC or something like that, like Gregor would say. The other thing, I'm
going to name this candle Wile E. Coyote.
Good morning, guys.
Good morning.
I just got the very, very, very end of KMan speaking, and I assume that conversation was about the BOJ.
Yeah.
Yeah, just to put it on the record, as I usually do in advance, I think that Japan is doing a huge policy mistake here. They've done plenty in the past. But I think my personal opinion is that they're probably now putting the nail in the coffin of what can unfold in the years ahead.
SWB audio capture, not registered.
A huge game-changing mistake. BOJ is offering to buy unlimited number of BOJs, and I think that's exactly what's going to end up happening. They will have to buy an infinite amount of JGBs. They will have to buy an infinite amount of them, and I think that they will also probably end up getting their wish fulfilled, they're going to end up with inflation that, above and beyond their expectations, and they won't know what to do with it. I don't know what you think about that, KMan.
Well, I mean, the Bank of Japan meeting is next week. It seems that they decided not to go intermeeting to loosen the grip, but I think the chances are real next week that they either start to change maturities, shorten maturities, or widen the band. If they widen the band, it's not going to change much to the problematic, unless they start to widen the band instead of being a 0.25% each side of zero now to like 1% each side of zero now. But I've never seen the Bank of Japan do such thing. But if they widen it even to say 0.5%, they are still going to be way behind most of their counterparty central banks, barring ECB right now. But then the problematic is not going to change. But they are in MMT on the other side. Since Abe came into force, they are in MMT, and MMT wisdom between brackets says it's not a problem. Just continue to print. But I mean, if that's the case, dollar yen is going to weaken into oblivion.
And as always, my question whenever I see policies
audio
like that
capture
is
not registered.
How do you reverse policy when things go wrong? Because the biggest problem is there are some policies that once you go in them, it's like a roach motel. You can check in, but you can never check out, right? How do you check out from that policy? Just tell me.
Because they ran into a pandemic and now a war, and that was not in the script, I think, when Abe came into power in 2012. But I've been saying
Hotel
I wasn't
California's.
Say again,
Actually, see, I've never. Well, yeah, I've stayed at some of those hotels before. Anyway,
but I think the long term, the very very long term for a weaker yen is setting. I said to a colleague of mine when I was in Japan then. I told him in 2012, I say, you will see the next intervention will not be to buy dollar yen, but to sell it. And 10 years later, we're there. And,
Indeed.
And it's not done. I think we probably are in a long term yen weakening.
Once again, for those that pay attention, regulators, governments, central bankers don't seem to learn from the most basic of lessons, which is you should not interfere with the free market, because most frequently there is the side effects of what you do are eventually coming back to bite you.
Okay, so we talked about the AAII investment sentiment survey Monday being the most bearish since 92 or 93.
SWB audio capture not registered.
I think 4,500 to 550 is important here. What are you guys thinking? Blake, I want to bring you in here with the S&P.
Hey, good morning, Dale. And by the way, I just heard. I was just listening to everybody and your comments. I missed your comment, Dale, or your question, because you're coming in kind of light today. So okay. I just heard my name, but I missed what you just asked. What were you asking?
Well, you were talking about the S&P. That we could rally early in the week, and I thought we would. Is 4,500 a big area to you to keep the bear case going? 4,550.
Yeah, actually, here I'll take the charts. Okay. So we're probing that 38% retracement. I think this is a real key resistance where we're at right now. And I don't know if you guys have, I'm sure some of you probably follow the guy that I traded for the group I traded for a while. He's out there tweeting about he thinks that bonds have may have bottomed here, and yields are going to come off, and that's going to be a tailwind for stocks. And I couldn't agree more, at least in the near term. So, I think that 4,500 or 4,530 is where I'd be targeting, which is the 618 retracement. This is going to be this resistance up here. I think we could, make it all the way up into this area. This is a whole, I would say trouble spot for the market, but there's plenty of upside here. I mean, between, like, if you think about where we're at right now, for us traders, it's Wednesday, and between now and Friday, some upside. Do I think this is, the generational low you should be buying because, we're going to hit all-time highs?
SWB audio capture not registered.
That in the, at all. I just think that, the rest of the week, maybe going into next week, you can see some recovery here, and you're seeing risk assets move higher. Bitcoin's actually making a move. Yeah. If you guys missed, if you guys missed Bitcoin on Monday, we had an outside bullish reversal day on Monday. We hit a new low. This is a 618 retracement. We just kind of probed new lows, got all the longs out, and then we've reversed. We're at the 50-day moving average. I think Bitcoin can see 44, maybe 46,000 again here in the next few trading sessions. What's that going to do to stocks? I mean, you see things like that happen. You got I don't want to say anything like the dollar Mexican peso, because these emerging market currencies are doing like the funky chicken, if you will. But you look at the commodity currencies. The Aussie is firmer today, right off of trendline support. You got the Kiwi, firming off of really key, the 618 retracement. Everybody knows that was really big support, at least if you're in the ForexAnalytix community. We talked a lot about that. Dollar Canadian's rolling over, from the 200-day moving average, and it looks like, we're going to see whoops, I didn't mean to delete that. Hold on really quick. So it looks like we're going to see a little bit of a bearish reversal down to 125. So, you look at those things, and that's like a recipe right now for continued risk assets moving higher, and then throw it on top of that, some of the pressures of some of these commodities, like you got crude oil, which we're trading here around 103, but it looks like we could trade back down below 100.
SWB audio capture not registered.
I mean, hell, I wouldn't be. I don't think I'd be bearish risk here. I don't think there's any reason to be bearish risk. You guys you guys have any opinions on that?
No, I agree. With yields dropping, I don't think we should be, at least in the short term, be bearish risk. Definitely not. No,
I think this is the chart. Talking about yields, Stelios. This is the chart everybody needs to be watching. And just so you guys know, last week it looked like this. Now let's just move this over. Last week it looked like this, and last week,
it came out
of this wedge, and I was like, hey, here we go. Maybe we've seen a bottom in bonds, and yields may have peaked, and that didn't happen, right? So
but look at the difference between the two RSIs
right here.
Yeah, right. It closed. The first time you thought we had a low. Look at where the RSI was.
Yeah, it actually dropped further, right?
Yeah, and now look at where the RSI is at this candle.
It's divergent.
Yeah,
and that's a great point, Dale. I mean, now we're seeing new lows on a divergent relative strength. So I mean, if we break above, let's just call it back above 120 in the 10-year, I guess that would probably be, if you're looking at yields, maybe somewhere back below, like, let's just say around roughly 265, somewhere down here. I mean, things might accelerate. So, and then that you're going to see a real tailwind for equities. So, is it too early to call? I don't know if I'm willing to stick my neck out just yet, but on the bond market, but it does look like it's basing, and maybe Bank of America.
SWB audio capture not registered.
Thing I guess we should probably talk about, and I know you guys talked about it a little bit, and KMan mentioned there was some comments from the Ministry of Finance. Look at the dollar yen, big reversal as far as right now goes. Now, a lot can change between now and 5 p.m. Eastern today. I mean, let's not forget, it's only 8 o'clock in the morning in New York right now. So, my charts have a long time before these charts reset. These daily candles look, they could dramatically change from here. But I do want to say that, we are getting, kind of a bearish reversal as we were nearing the 130 level. I don't know if you guys saw the chart of the day that I put up yesterday. It's free, for those of you that miss it. And I do say here that I'm sorry that I haven't been posting the chart of the day. It's like the Trader Summit kind of took the wind out of me in the late afternoons. So late afternoons, I've been focused on so many other different things, but we had a big confluence of fib levels coming in the sterling yen right here at the 168.15 level. But one of our viewers, and I forget who it was yesterday, he notified me yesterday. He's actually one of our ForexAnalytix members. He notified me yesterday at during like the morning edge, I think, or the daily roundup. I think it was the daily roundup. He was like, hey, it's also the weekly 618, which if you take the, June 2015 level to high, the October 2016 low, the 618 retracement also comes in there. You can also see a lot of, price action spikes around these levels as well, back here in 2014. So the note was that, hey, we're coming up into a big confluence. So
SWB audio just, capture, not registered.
There's also pretty big levels being tested on the Aussie yen, Euro yen, Canadian yen, even Kiwi yen. So a lot of reasons why we could see a stall in the US dollar, Japanese yen. But, I'll kind of echo what you guys were talking about earlier. I don't see any reason long-term we should be buying yen, but if you are short yen and you've been short yen, these are the times where you've got to start tightening up your risk, right? You have to start like looking at your exposure saying, okay, well, maybe I take some profits off the table. Maybe I, move my stops up to break even if you've been trading on the long side of, these yen pairs, meaning short yen. I think that's kind of like the right course of action right now. And some of you are, trading counter trend, which is fine. Just, do it carefully and with smaller size. Right. So, anyway, hey, somebody asked about, the Steve says, I still haven't received the videos. Yeah, you did.
Yeah, I was going to say everybody who registered for the summit will have got an email unless you revoked consent for your data to be processed, in which case you don't get any emails from us.
Or to be fair, Stelio, there is always a chance that some email got lost, they deleted by mistake, might have ended up in
spam.
I'm putting the link. I'm putting the link here on the chat box.
Actually, yeah, just go to tradersummit.net, guys. If all of you guys listening in, it's really easy. Go to events, April 2022, and then scroll down. They're all there.
Yep.
Right. So you guys can see them all there. And they've been there for
quite some time now.
For like the last several days. Many of you
SWB audio capture not registered
folder, or and a lot of you, and I'm going to be brutally honest here, a lot of you put in the wrong emails. So and you probably didn't realize you did, or you accidentally did. So they've been posted there for a while. So there you go.
Yep.
All right. So anyway, where were we? Let's talk a little bit about this. I want to talk a little bit about the Kiwi, and anybody. Oh shoot, we're almost out of time. I've got some short exposure of Kiwi dollars, not short the Kiwi itself. I'm short, Kiwi on crosses. I've been playing like my sterling Kiwi. I was up 400 pips. I'm only up like 300 pips on this right now. But I played it, I've been playing it on the long side here. I still expect it to break above this resistance. But we have New Zealand CPI tonight. You guys, do you think CPI has peaked? Oh shoot, we have Canadian CPI in here in just a minute. Well, as I'm pulling up the Canadian dollar and pulling up the Canadian data, do you guys think that
that's an easy answer? No.
Okay, all right, very good. All right, how about Ryan or KMan? Any thoughts here?
What was the question? Do you guys think what?
If inflation has peaked.
do we think? Do I think we're gonna get?
I'm just saying near term. What do you guys think here?
Are we gonna get a low print? Yeah, we could do. But has it peaked? No.
Oh shoot, we just got Canadian CPI coming.
Oh, there you go. 6.7 year on year from 6.1. Yeah, that's hot.
Yeah, that is hot.
Hot.
Core was up 5.5% versus 4.2 expected.
That's hotter than Steve's wife.
Audio capture not registered.
That's not easy. And that's not easy to do, I have to say.
All right. Well, let's without getting into too deep conversation about Steve's wife. Just keep in mind we are about 30 pips away from reaching a simple AB equals CD target. And yeah, so that you guys don't scare me. We got New Zealand CPI tonight, and I'm hoping that New Zealand CPI doesn't look quite like North American CPI, but we'll see. All right. Well, I want to thank the entire team for being here today. Also, I need to mention, if you haven't tried out the trader funding program, we had a bunch of traders qualify for bigger accounts last week. Have we had any this week, Stel? I think we just had one last night, actually.
We had one, last night, yeah.
Well, we had one last night. So, that means that traders have paid an assessment fee. The assessment fee is relative to the account size that you are trying to acquire, and have gone through made 10% without having more than a 5% trailing drawdown on a demo account. They've reached their 10% target. They have now accessed live trading accounts and are trading these larger amounts now.
A lot of hidden talent out there, Blake.
There are, and
they don't have 100,000 followers, but they can trade.
We're finding them, and that's awesome. I'm pretty stoked about this whole platform for our traders. So check it out.
I think we should also say to if there's people out there in the program and they're finding it a little bit tough, you've got access to ForexAnalytix, you've got access to all of us. Come in and get some help. It might not be plain sailing for everyone. We're here for everyone in this program.
Yeah, and thanks, Ryan, for mentioning that. That is the differentiator, right?
SWB audio capture not registered.
Community and have trade ideas and people to talk to, and analysis to read, and you're not just left out on a limb somewhere. So anyway, check it out, and also make sure you visit our webinar sponsors, Forest Park FX. I don't mention them enough, and I should mention them more. They're the reasons why these webinars happen. So check them out. They're the concierge of FX brokers. All right, guys. Dale, I'm going to turn over to you. I think you have who do you have today?
Peter Goodburn today.
Oh yeah, Peter.
Oh, nice.
Good. Peter's always good to listen to. So make sure you guys stick around. And I'm going to pass it over to you. Thanks everybody for being here. I'll see the ForexAnalytix subscribers. I'll see you guys in 45 minutes for the Morning Edge webinar.
Hey, KMan, are you still here? Before I go to Peter?
I am, Dale.
All right, I want to know if I could open an account on your island.
On my what?
Your island, the Cayman Islands.
Oh my goodness!
That's
like the worst dad joke, and you're not even a dad.
I've had dogs, Blake, and stepchildren. Anyway, let me know. Send me the wire instructions.
Okay. Viewers and listeners, I'm very sorry. Dale had a little bit of a breakdown.
All right, so
all
right, my trading warrior brother Peter Goodburn is with us for some great looks as usual. Peter,
hey Peter, switch on your camera.
Okay, here I am. Can you see me?
Oh, look at the lookie Peter has now.
Oh, I love it.
Cool, guys.
All right. So
nice to see you.
How have you been with that?
Huh?
How
Nice to see you.
have you been with that?
Huh?
How have you been?
Yeah, good actually.
You
Yeah,
look
can't
good.
complain. Life's
You
good.
look good.
SWB
Oh,
audio
thanks.
capture, not registered.
All right.
Okay, let's see what you have for us.
Yeah. So let's look at some charts, Peter. If you don't mind, you go to share screen.
Yeah, let's have a look. See what's cooking, huh?
Yeah, I have some burning questions.
Oh yeah.
For you
Okay.
today.
Good burning.
All
Burning questions, right?
all right. I wanted to start here. Okay, so I want to acknowledge that you put out that piece in January that called the first break that we had, and then last time you were here, I think it was right around. You guys probably can't see my cursor, but right around the March or February low, and I said, couldn't this be an ABC and we'd go to new highs, and you said no, I don't think so, but we could go 46, 4700. Mission accomplished and turned down from there. So I guess the next question is this bounce we're getting and maybe a relief rally with yields and a lot of bearishness out there. You're looking for what's going to be the level that it has to turn back down for the bear market scenario to continue.
Yeah, okay. Well, I mean, we'll jump to the very short-term picture and have a look, because, yeah, it is quite fascinating. We got to this counter-trend rally just really, just before Easter, well, in fact, back end of last month at 46.31. And what I was really watching for in the S&P, really to affirm the idea that that we're in a sort of a larger decline this year, and an unwinding of risk assets, and sort of really I think a pause in the inflation scenario, would be really this late February upswing in the S&P.
SWB audio capture, not registered.
And it successfully did so. I mean, if we simply take our standard measurement of the zigzag and extend wave A to this extreme here, and if I double click, that will produce a 61.8 ratio extension ratio for the target for wave C, and you can see it, it's pretty much bang on. And then we started to move downwards after that, and that's been a very strong confirmation that basically, I suppose the trend is downwards.
Okay. Does sentiment? I know you really you have to trust your tools, but does sentiment ever bother you? There's talk about the AAII sentiment survey, most bears since '92, most negative since '92. In a bear market, does it have as much impact, or does it just generate what we're getting right now?
Well, I think in a bear market, it'll give you pockets of rallies, won't it? I mean, that is excessive. I saw the same numbers, the differential between bulls and bears has, hit that, as you say, that major low there, and it normally produces a good counter trend rally. Well, we have seen a good counter trend rally. I mean, it's okay. I mean, in relative terms, it's still relatively small compared to what we saw from late February into the March high. But there is something going on over, here. And I think the most important thing really to validate the next downswing was this 5-wave decline here. It's a bit overlapping, so I've drawn it as a diagonal with a couple of boundary lines to emphasize the diagonal. But since then, it's been running up into an expanding flat up here, had a little up to 44.66, and then it had a little 3-wave zigzag decline to a slightly lower low. We can measure that. And this week, yesterday in particular, we start getting some
SWB
upside,
audio capture,
really
not registered.
Movement for wave C. And yeah, I think we're coming to completion today, probably. I mean, 45.02, 45.20, that should be enough. I think we're going to start kicking down. So yeah, sentiment does play an impact here. And I'm normally very tuned into those. But I think in this particular case, it's a very hard talk to convince of a more protracted upswing when you've got this particular pattern sort of unfolding in the short term.
Yeah, and you go back to the drawing board back over 46.31. It's right there on the chart. for
that's
for
right.
another bearish count.
Yeah, I mean, we can never be 100% certain about anything in this game. We can only deal with probabilities.
Right.
But yeah, it's just a point of which, we can emphasize the fact that if we were somehow miraculously to trade above 46.31, the downside momentum's gone. But I find that would be rather fanciful to think in those terms. I mean, rating it as a probability, I would give it probably 10% only at the moment.
See, I want to go to yields and yen next because people are saying we're actually getting a green candle in the bonds today, Peter, in TLT, and we're getting a little outside day reversal in the 10-year.
Yeah.
And a lot of people are going to say if that is a top for a correction, and I think I want to know where you're at. Okay. That they believe it's going to be bullish for stocks. It takes the pressure off tech higher rates. And I remember talking to you I think it's just a Skype call. I don't even know if it was an interview. And you said, well, Dale, what do you think is going to create a downdraft in the rates? And I said, risk off, questioning, and that's exactly what you think.
SWB audio capture, not registered.
Bond rally and yields to pull back. So not many people thinking we could pull back to 130. I think B of A is making a big call at 230 today.
Yeah, well, I think they'd be grateful for something like that. I mean, I know there's been a real sort of inverse squeeze, if you like, on the fact that the T-notes have been sold down so aggressively, and the yields have popped up. And winding the clock back, a month or more, I thought that we would get to sort of something like just above 2%, and that would be it. And we've had this extra leg in sequence up. And I've been sort of trying to examine what that looks like from really August. And this was really important because in this sequence up, there's an element of overlap in waves 1 and 4, but that's not visible in the T-note futures. Now, you can argue the point. I know there's a lot of Elliott guys out there practicing Elliott wave who say, wow, okay, even three pips of an overlap, that's negation. Well, it's not really. I mean, look, if you look at hundreds and hundreds of different impulse waves, eventually you'll come to the same conclusion I have. And that is that from occasional points, you're going to get what I call now an Elliott wave kiss. It's not a French kiss. It's a little peck on the cheek either side, and then off it goes again. And this happens. And what you've got to do in those circumstances where there's a bit of overlap is to check. If you're looking at a futures market, check the underlying cash market to see if it's duplicated, or even look at something that's highly correlated, maybe 2 or 3 other things which are highly correlated, and just check them out. I did this on the T-note futures. I'm just going to find it for you here, and found that there was no overlap. And
SWB audio capture, not registered.
Question the call or reevaluate the call?
Yeah, I mean, it did, because I think that although there's overlap from August in that upswing in the yield, there isn't really in the futures here. And this is really quite an extraordinary fifth wave now. This is an extended fifth wave if we count down 1, 2, 3, 4, 5. But critically, there's no overlap. You see, wave 1 was here at 129,
right?
Really 130 around, and this is 129 figure. So yeah, I've come to the conclusion that we've got 5 waves up here, and that sort of also is a good point to compare with maybe the 5-year yield, which doesn't overlap. So I'm quite satisfied that that's okay. Now we have got overlap in the bigger picture, going back to the pandemic low here as it evolves to the upside, and there's an element of overlap here. Well, not just a small element. I think this is undisputably an overlap of wave 1. So I think this has cornered itself into a diagonal pattern, and that would open up the way for a good risk off, as you said in the opening remarks here, for a period of time over the next several months, if not into year end, where the yields start to pull back. We're going to get a peak in the CPI. I think when I last looked at the CPI, there was a very nice 5-wave upswing pattern in that economic data point from the pandemic low. So I think given that we're pushing up at what were we last on the CPI? The headline number was about 7.9, wasn't it?
Steve
Dale?
would know. He tattoos them in his arm.
Okay, I thought
Steve,
it was.
You there? Oh,
maybe he's gone for lunch break.
Okay.
But,
yes, sorry. What was the question?
What was the US CPI headline number last? Was it 7.9?
The last one we just got.
Yeah.
8.5%. 8.6, something like that. Yeah.
SWP audio
right,
capture,
sorry, yeah.
not
8.6.
registered.
Well, there's a very nice 5-wave advance there from the pandemic low. So if you're able to get a chart up on that, a real-time chart, you can see it. So I think that almost certainly we're going to get some risk off here. And I think that's going to have an impact on the dollar as well. And actually the dollar yen, which is, I know, the next thing you wanted to look at, wasn't it?
Yeah, exactly. Let me ask you this, Peter. Wave practicing Elliott is, there's so many ways that people skin the cat in Elliott. But you know what? Something that just happened in Russia, you didn't think they would invade. You're not the only one. At times, could there be just global events that distort, magnify, accelerate certain market moves that ordinarily wouldn't? But the largest war in Europe in 70 years could be an event like that it just overwhelms most technical methodologies.
I love this subject. I mean, you're hitting onto a subject I love to talk about, but you've got to be fairly open-minded. When I started my career in doing Elliott waves, and I'm talking about 35 or plus more years ago, I was a bit of a purist, and I really thought that all of the Elliott wave patterns, irrespective of some exogenous event or geopolitical event, would be able to be predicted. In fact, quite the opposite. You should be able to almost, if you can
forecast
those geopolitical events or exogenous events ahead of time. But I have in the
SWP audio capture, not registered.
I see things a bit differently to that. I think that things can be distorted at certain junction points. I've seen some of the best Elliott wave patterns that should be basically unbreakable, impenetrable, suddenly go haywire and offered a tangent because of some exogenous or some piece of geopolitical news. And I've seen this, it doesn't happen that often, but enough for me to be convinced that my original perception back in the 80s was wrong, that there are occasions where things can be changed. And if you look at it from a philosophical point of view, and you understand in this day and age that energy and matter is interchangeable. So, okay, we can go back to Einstein's theory on this, E = mc squared, energy and matter, E and M. These things are interchangeable. And what scientists haven't really got to grips with at the moment is that at the quantum level, the subquantum level, they can't understand why two different particles are attracted to each other. And if you walk into a room with those two particles almost static, that suddenly they start interacting with you as well. This is all about the microcosm affecting the macrocosm, and its manifestation through a thought process. What I'm trying to say is that if there's enough people thinking about a certain thing, you're going to get that manifesting into a certain way and direction. And it's almost as if the universe sometimes has these waiting rooms. And it's a waiting room for something to happen where the road splits into different ways. And depending on
SWP audio capture, not registered.
Of maybe it could be an individual if he's got enough power on that, or it could be a conglomerate of individuals like the financial markets. Right. You could affect that change at certain junction points. Okay, I won't go into more details on that, but I do believe that could happen. If the question then is dollar yen under one of those situations? No, I don't think so. I think that happened certainly in terms of the Russian situation, because I had some Elliott patterns before Russia invaded Ukraine, which looked as if they wouldn't. And that's where my basis of opinion came from. But I do believe that since then, that was one of those pathways of exogenous events where there was a trigger point and it decided to take a different event. But I think that those things, when they happen, they're pretty rare. You know, by the time you finish your career, you'll be able to count them on just your hands, the fingers on your hands.
All right.
It won't happen that often.
Okay. So besides risk off and, let's go to the yen. I know it was a monster that surprised me. I have no idea where we're at. And, we have some guys here that, were on desks and lived in Japan, and wow. Okay.
Well, I thought I'd show you a chart, which I had from, this chart was basically at the pandemic low when we were trading at 101.18. And don't forget that the month before, in February, you're at 112, and suddenly you're at 101. Yeah. Well, if you're going to, when you see something like that, the mind immediately starts to think in terms of extrapolation. Yeah. And of course, this is really where you get major directional changes, because if you've got an extreme sort of situation like that, basically
SWB audio capture not registered,
which it turned out to be. We published this chart on the 11th of March, just as that low occurred, and we said, right, we're in a new uptrend now. We're going to complete this zigzag. We're going up, to 121.80. I used the very smallest Fibonacci ratio in order to get that. I didn't want to frighten too many people, but I mean, that was frightening enough. When I presented that to a lot of our institutional clients, they said, are you really crazy? Some of them have known these long-range forecasts before, so they didn't actually say it, but I could hear them think it. but you're right. I mean, look, that's a huge move up, and we're describing a zigzag. Well, it turns out we didn't need to be so conservative using a 14.58 minimum Fibonacci extension ratio. We could have been braver still and used the 61.8 or the 38% number here. The 38 number was at 127, and the 61.8 is coming in at 132.70. Well, I'm not so certain we're going to get that high, but we have broken this high, basically, going back to the 2015 high. And that means that this same zigzag pattern is unfolding as wave B of an expanding flat. So that means at some point, we're going to get this big 5-wave decline over the next several years, down like this. And that's itself going to be interesting, because we are talking about a dollar crisis.
Exactly.
A dollar crisis. Yes, this is all very, very familiar territory. And, in our annual reports, we've got a very long-term dollar decline basis, the 7.8-year cycle coming down. It's going to basically drop the dollar by about 45%. And just recently, I've just updated a dollar chart, which, no, sorry, that's gold.
And the dollar is well extended a little further than original thought, right?
Yeah, I thought,
SWB audio capture not registered.
When the dollar was trading at 88 something. I thought, right, we'll get back to wave 4 proceeding. So from an Elliott perspective, you always work with the minimum criteria to the upside. And wave 4 was about a 50% correction. But we've done 76%. I mean, okay, and that has been elongated and prolonged, mainly because, of course, we've got these rising inflation pressures, which weren't evident pre-COVID, not in the basic materials. Don't forget that we had price inflation going back to the financial crisis lows, when the financial crisis bottomed, and we had commodity prices surging higher.
Yeah, short memory.
In the aftermath of that.
Yeah.
But we never got underlying inflation in things like foods and services, because basically the economy was flooded with those, and basically you didn't need to raise prices. It's only after COVID that you've had price inflation as we know it. Why is that? Why after COVID? Well, because for one big reason. First of all, okay, you've got a lot less people trading now as they were before. I mean, a lot of people went bankrupt these governments have made a lot of people bankrupt. It's criminal through COVID lockdowns. And the death rates through COVID, the 5-year aggregate death rates are no different after COVID than they were before. And you can look up Andrew Kaufman on Google and check his statistics out for that. He's got them countrywide. I mean, it's unbelievable. So there's less people around. You can stick up your prices and nobody can complain, because either you want it or you don't. If you don't pay the price, go away. That's their attitude a lot of the time, especially in big industries.
SWB audio capture,
so
not registered.
Up. I mean, oil prices, why didn't you see headline inflation, as Steve said, at 8.6% back in 2008 when oil initially traded up to $134? Why? Why not then? Why now? Think of it that way.
Why? Why didn't we see it back then?
Well, because there was a lot of competition at that point. It's only because post-COVID, there's a lot less people around trading. I mean, when I say trading, I mean manufacturing goods. At the competition has been lessened.
Yes, we went from supporting a massive unemployment situation here in the U.S. to having labor shortages.
Well, that too, and that also contributes to the problem. I've got friends who are manufacturing a lot of goods in China still, and sort of importing them into the US and Europe both. And we're talking about medium-sized companies, 100 million plus. And they've said we haven't put up our prices for our end products to our wholesalers for 15 years, but we have done post-COVID, and they've gone up like 50, 60%, and people are still buying them. They don't like it, but they're still buying it.
Yeah, well, a lot of people say that we had, supply chain disruption. I think we had supply chain destruction.
Yes,
and it's never going to come back to the way it was, just in time warehousing. And so, that's going to take years to reconstruct. So are we going to have shortages of everything, and what you're talking about in commodities is just basically a correction?
SWB audio capture, not registered.
Yeah. I mean, it could be quite severe. And then afterwards we go up again, which is the final phase of what I call my inflation pop cycle, because that theoretically started back in the financial crisis lows, when central banks first started to invent the idea of quantitative easing. Okay. So the initial big commodity surge, if you go and look at something like copper, for example, where we can have a quick look, and the big surge that followed the financial crisis lows was really the first phase of the inflation pop. Then we had a regression period for 5 years with the lows in 2016, which I call the grand resynchronization period at that time, because basically at that time we came down here in 2016, which was a 5-year disparative movement to stock markets. The S&P was trending up during that time, but the two patterns which represent the inflation pop, the final phase of the secular bull market from the financial crisis lows, are very different for stock markets to commodities. Commodities are all developing into zigzags. Here, good example for copper prices: A, B down, and C up. For stock markets, they're all evolving into 5-wave expanding impulse patterns, with a few exceptions. Here I'm referring to some of the things that our viewers today will be looking at and trading, like the S&P and the Dow and stuff like that. Okay. So you've got these two distinct patterns, and it was necessary for commodities to have this breakdown and this disparative negative correlation for 5 years, because how do you otherwise overlay a 5-wave expanding impulse pattern to a zigzag 3-wave pattern? At some stage they're not fitting together. It's like putting a square block in a round hole, or the other way around. It's just not going to work. But so you've got to have this dislocation for a while.
SWB audio capture, not registered.
Lows, and now they're moving basically in rhythm again. So generally speaking, if we get a commodity price decline this year, and specifically things like crude oil, energy, base metals, copper, and stuff like that, gasoline, you're going to get the stock markets dropping down as well.
Okay, so I mean, are we in a position for a liquidation break? Your commodities, stocks, basically, you want to be short the board and short the dollar.
Yeah, I think I think so, because I mean the dollar looks about done. It's been, as you said earlier, a very big steep sort of correction, but we had a very similar steep correction, winding the clock back pre-COVID. Yeah, absolutely. The COVID high. Let's see if we've got that here. The COVID high up here at 102.99 was a very steep correction to this preceding 5-wave decline, and we've got sort of a similar function going on here as well. Okay. So I think if we get the dollar turning down, because don't forget this big strength and push up in the dollar was all about rising inflation pressures. If those inflation pressures start to ease off, if the perception suddenly switches around and changes, the dollar's going to dive. We're going to see a complete decline across the dollar, against most currencies. That means 10-year yields will start to correct to the downside. And it means that, dollar yen's going to suddenly do a reverse. I mean, don't forget Bank of Japan. I mean, if you want to short the yen right now, you're going to be taking on the Bank of Japan in the next few days, probably. Do you want to do that?
Looking for solo intervention.
I would think so. I think these guys won't have any.
SWB audio capture not registered.
But what do you think? More than them, they need the U.S. to coordinate with them, don't you think?
Well, did they do that in the past?
No.
Well, why would they need it now?
Yeah, interesting.
Okay. But anyway, yeah, I think then you got the yen topping out now, which is great from the pattern perspective. I mean there's nothing extraordinary about that. And when you look at things like gasoline prices, which came top of the list in the energy contracts for last year, gasoline has topped out with crude oil already. I think I've got a gasoline chart here. Yeah. So gasoline topped out in March at 380.89. Yeah. And that one's getting poised ready for a very big decline. So, like oil prices. So, no, I think we've already got, to some extent, those inflation tools, which had really driven up that CPI so strongly in the last 12 months. Some of those, particularly the energy sector, they're all topping out. So, it's only natural gas that could do a little bit more, but that's unique to Europe.
Well, I could already hear what's going to be going on here in the summer, late summer and fall, is that Jerome Powell's going to say that we did it, and Joe Biden's going to be saying, yeah, we have lower gas prices, and their polls are in the toilet. People are really angry at Powell, and they could say, "See, I told you so."
Well, I think there might be some element of that. I mean, the odd thing that's going on really does enter around the fixed income markets at the moment, because you've got central banks going through their quantitative tightening program now, just at the time when there's a potential downturn, if being shown up in the
SWB audio
yields,
capture not registered
yields and things like energy prices. So it's a bit strange. They're going in one direction up, while the market's probably going to come down, and they're going in opposite directions. So you've got to say that at the moment, okay, people are extrapolating again, which is a dangerous thing to do this late in the trend. And the 2-year yield is likely to take a hit to the downside somewhere soon below 3%. I mean 3% is a very big number on the US 10-year yields, because we go back to 2018 for that high. And that's
that
if we
go
to
taper tantrum.
Yeah, exactly. And look, here's close to 3% here, 299.40 on the 2-year yield. Are you telling me that this exponential rise is going to keep going on forever? Absolutely not. I've never seen one. That I've never seen. That is rarer than a dodo.
You know what? You're rare. And I really, Peter, you opened my eyes to some things, and you know, I like the way you would adjust to when things don't work out exactly to plan, and you really put your thesis and narratives through the acid test. And I appreciate you coming here, and you know, the narrative of a dollar peak. You want to just show the euro and then your website, and we're running out of time. You know, and wouldn't it be classic that the euro bottomed on the most dovish ECB meeting possible? So far, we haven't been able to take out Thursday's low.
No, I mean, this is the big number, 106.35. It shouldn't really break that. So, I mean, if we're going to move up, and this is a correction, it's going to have to do it right now. So,
SWB audio capture, not registered.
And to be honest, if you haven't already got a position and you're fairly neutral on this, you know, you might want to wait a bit and pick it up later, because, you know, you won't have a, but I mean, there's, I genuinely think that this looks really good. I was looking at Euro Swiss earlier today. We haven't got time for that now, because I'm going to give you my PR campaign now. But the Euro Swiss has had a fantastic 5-wave declining sequence. Well, while I'm telling you, I might be able to show it to you. And that shows the euro strength coming in back in. So
and EG, euro pound did not make a new low with euro on
Thursday. Yeah, exactly. This is the Euro Swiss. Look at this decline from back end of last year, 5 waves down. Look, I mean, this is fantastic. There's going to be a really big uptick in the euro. So, I mean, if you're going to see that against the Swiss franc, and the Swiss franc is a safe haven currency, what do you think is going to happen to the rest of the markets? Yeah. Basically, yeah. Okay, so
all right.
Look,
all right, show your website, Peter, so that if people want more details about it, where they go to subscribe and follow you.
Well, thanks, Dale. If anybody's tuning in today and would like to learn a little bit more about Elliott Wave, our weekly report, actually it's bi-weekly. We put out a report twice, 2 reports per week. It's called the Elliott Wave Compass. You just go to wavetrack.com, and if you take a look and look at subscriptions, so you can mouse over here, and the first product to subscribe to is the Elliott Wave Compass report. It's $39 a month, and you can actually choose different time periods if you want to. And there's no auto renewal on this, so you won't have to sweat if you put through a transaction and want to see how we're doing, to get a feel for what we're doing. You won't have
SWB audio capture, not registered.
Expire. It's up to you to renew it. And I can promise you we'll put in some very interesting tutorial about how we measure up and use our Fibonacci tool. So yeah, we'd welcome anybody that hasn't already experienced our reports to come in and join us. And for those of you on Twitter, I actually got my Twitter handle ready today. Nice. Well, at least I thought it was. But you can just type in WaveTrack or Twitter, and here's our handle, and follow us there. We've got some good information on there too.
Thank you, Peter, for you being here and your giving spirit, sharing your stuff, and it was great to hear an update of your narrative.
Great, Dale. Well, yeah, as always, it's great fun to be with you guys, and if any of the
thank
team
you, Peter.
also,
nice to have you.
Great, Steve. Yeah, it's great to see you too, and all the best to you, and good luck for the coming week.
All right, Peter. Everyone, Peter Goodburn. You could follow him at right there at his Twitter. There you go, at ElliottWave_WTI. Peter, have a great week. I'll be talking to you soon, my trading warrior brother.
Thanks, Dale.
And really appreciate the contrarian view to what everyone else is saying. Gives our community some balance, and we appreciate it.
All the best.
All right, so that's a wrap, everybody. 7 minutes. You can get into the room with the guys on the Morning Edge, and I'll see you guys tomorrow. Good hunting. Remember, don't just count your pips, count your blessings. And glad to see the community interacting today. See you, Sinatra. Okay, Hussein. I'm glad you enjoyed it, Laura. Adios, everyone.
Bye, everyone.
See you, Steve.
SWB audio
Bye-bye, Dale.
capture, not registered.